Kia ora, I'm Mary Jo. I'm an economist here at Kiwibank, and today I've got with me heavy hitter, head of balance sheet management, Belinda Newman.
Kia ora, Mary Jo. Thank you very much for having me here today.
Yeah, no worries. So B, yesterday the Reserve Bank delivered its final monetary policy decision for the year. We were expecting it to be a big one. We were expecting 75 basis points to deliver on that. Where's the cash rate today?
Absolutely, they delivered. They delivered 75 basis points, so the OCR has increased from 3.5% to 4.25%.
Wow, that's a big move. It's the largest hike to the cash rate since it's been introduced since 1999. It seems pretty late in the tightening cycle for such a big move, but it seemed like the data was all pointing towards a big move. Inflation and inflation expectations continue to surprise massively on the upside, so it's needed. Those big moves are needed to temper those expectations. But it's not just about the cash rate today. We're keen to see where the Reserve Bank thinks it will be, in the future down the line. What happened to the OCR track?
I think that's the most interesting part of yesterday's announcement. So the overnight cash rate, the Reserve Bank published a track, and essentially last August when they published it, they were expecting the OCR to peak at 4.1% next year. Yesterday they updated that, and they're now expecting the OCR to peak at 5.5% next year.
Wow,
so that caused
move.
quite big moves on the day.
Yeah, so what happened in wholesale stock markets with such a big move in the OCR track?
Yeah, if you look at wholesale markets going into yesterday's decision, we were expecting around 5.25% as the endpoint for the OCR. Now we're pretty much fully pricing the OCR's expected 5.5%. So you saw approximately 25 basis point or 0.25% shift higher in yields in the front end of the curve out to say 2 years. Longer out, it was a lesser move because I guess there's more focus on what happens after next year and their comments around potential for a recession.
Yeah, with all the tightening that they delivered so far, it's 400 basis points. Obviously, that'll have a massive material impact on economic growth. In fact, they're expecting the New Zealand economy to contract next year. It's a small contraction, but a contraction nonetheless. Now, in terms of currency, it looked like it barely moved to the reaction yesterday, but overnight there's been a bit more risk-on moves, and we've seen the currency trade around 62 cents, and I think it might be on its way to 65, especially with this divergence that we're seeing currently with central banks. I'm thinking of the RBA and Bank of Canada and Bank of England. They're all moving more dovish and slowing the pace of their tightening, but the Reserve Bank looks, firmly hawkish. What does that mean for the direction of the Kiwi?
Yeah, 100% bang on. Really, when it comes to currencies, what we're looking at is interest rate differentials. So the differing outlooks from the central banks really matter. And what we've heard yesterday from our central bank is that they're very keen to get a control of inflation. They're going to be very aggressive in terms of their near-term OCR moves, and they'll push the economy really to the brink to get inflation under control. So what that means is, really well-supported New Zealand dollar going forward, particularly against those currencies where central banks are quite divergent in their outlook. In particular, for example, the RBA, who have signalled a much slower pace of tightening. So yeah, I think it's just going to be really interesting going forward. But as you say, a slow grind upwards in Kiwi potentially. Yeah,
a strong New Zealand dollar though it's favourable for our inflation outlook. It does mean that import inflation is just a little less. But 2023, it's going to be an interesting year. Lots to happen. There's a long break between now and their next meeting in February. So a lot can happen.
Yeah, and we'll see if the RBNZ delivers on their 5.5%.
Yeah, so stay tuned.